Welcome back to the channel. It's me, Adam. I hope you're doing well. I have my laptop in hand. Guys, I'm ready to go with this one. So on this channel, we've been following the market really closely for the past 5 weeks, as the VIX had been spiking and we kept seeing increased volatility in the markets. And we've been looking at a wide variety of different variables: inflation, valuations, PE ratios, the dollar index, the FANG index, just crypto, the precious metals. And right now we could be at a potential inflection point. If we get a green Friday today, the medium term, as in the next few months, could be primed for a potential rally. So let's get right into it. If you're new to the channel, welcome aboard and hit that subscribe button. Here at Unlimited Options Investing, we talk everything from stocks, crypto, options, ETFs, and we're investing for the long term. As always, hit that like button and let's get started. And before we even get to the stock market and the S&P 500 and the NASDAQ and the Dow Jones and all that fun stuff that I like a lot more than crypto, we have to take a look at Bitcoin. What is happening? And looking at the 4-hour time frame, we bounced right off that 20 EMA from just over 57,000 right up to that psychological resistance of just under 60,000 US dollars. And this is really exciting for crypto because I believe that Bitcoin leads all the other cryptocurrencies, and even to a degree I believe that's true for Ethereum and as well for sure all the altcoins as well. Eventually, I don't rule out a flippening whatsoever for Ethereum to one day overtake Bitcoin. I don't know if that's going to happen or not, but I don't doubt it to happen either. But for the time being, Bitcoin definitely does influence Ethereum in my opinion. And taking a look at this chart, and we can probably get rid of these lines at this point since we're not really that close to them anymore. We've been on a really healthy run that we're taking 3 steps forward, 1 step back on a healthy pullback, 3 steps forward, pullback, and so on, touching either 20 EMA or the 50 EMA. And until we essentially break this 50 EMA for the time being, it's all systems go right now until we're told otherwise. And zooming out on the daily, we see that we're right at that resistance at the $60,000 mark. And until we break that, I think we'll zoom right past 62,000, no problem, testing that all-time high. And that's the big test. If you break that, we'll see what happens with crypto. Unless there's some really bad news, this is purely momentum driven, and people are making a lot of money running off like bandits. How high does this go? Let me know in the comments. Let's take a look at Ethereum. And it's also showing some strength right now, and when we zoom out, that $4,000 mark would be that resistance point, similar to the 60,000 on Bitcoin. And exactly the same thing. If we break that, next stop, 4,400. And if we break that, let's see what happens. It has to happen first. We could break down at any point, and it could be a fake out, or we might have to consolidate for a bit. Let's just have to see what happens. And Cardano looking more or less unchanged right now, still in the middle of that range of about $2 to about $2.50. And taking a look at CoinMarketCap, that we see that Bitcoin and Ethereum over the past 24 hours are having one of the stronger runs relatively. Not to mention XRP and Solana are also seeing some strength as well, up 1.76% and 5.9%. And although we know that crypto can be a lot more volatile than this, it's the fact that Bitcoin and Ethereum that lead this entire kind of industry or asset class are nearing and potentially breaking key resistance points. And it doesn't happen often that I talk about crypto before I talk about the stock market, especially on a day like this. But guys, look at the green galore. Finally, after all these 6 weeks, this could be the potential of the beginning of something. Not for sure, but potentially. And let's take a look why. Yahoo Finance, S&P 500 gains 1.7% in best days since March after earnings, jobless data top estimates. The Dow gained more than 500 points, or 1.6%, and the NASDAQ also rallied by 1.7%, building on Wednesday's gains as Treasury yields fell further. And also check this out, the benchmark 10-year yield pulled back further to come in below 1.53%, after topping 1.62% just earlier this week. So first, starting off with the S&P 500, we see a big gap up, and we open and close above both the 20 and the 50 moving averages. And this was a big inflection date because as of yesterday, we weren't out of the woods yet. Today, we're that much more out of it than we looked yesterday. That even if we do pull back to Wednesday's levels, that doesn't nearly look as bad had we opened and closed below Wednesday's candlestick. And the reason for this, guys, if we draw a trend line moving down since the beginning of this correction, this is a solid open and close above that trend line, especially after forming this volatile base over the past 2 or 3 weeks or so. A very similar chart looking at the NASDAQ as well, again, because so many stocks overlap. So same kind of idea. And taking a look at the Dow Jones, this one's still in the middle of the range. We don't get excited about this one until it breaks this resistance of this channel over here. However, if the S&P and the NASDAQ start recovering from these levels over here, there's a decent chance that the Dow is also going to be doing the same. Looking at the FANG index, which is Facebook, Apple, Amazon, Netflix, and Google, always wishing that it was Microsoft instead of Netflix. And I mentioned this a few videos ago, using the data that we see in the past, that whenever we were under this green line, the 50 EMA, it was usually a good buying zone. And this dates back all the way to last year's correction. Even if you look before that correction, funny enough, we never even touched that 50 EMA. But now that we've been in this channel, whenever you're below it, it's usually a good buying opportunity. Again, nothing's for sure. It doesn't need to follow that at all. However, after the price action today, I feel a lot more confident. Again, this could all be one big fake out. We could continue seeing weakness. That is completely possible. I'm not ruling that out whatsoever. I will say that I feel a lot more bullish today than I did at the beginning of the week. Taking a look at the IWM, the Russell 2000, also in the middle of the range, and we're really waiting for this one to take off. Between Cardano, the Dow Jones, and the IWM, which are all trading in ranges, this is the one that I want to see break this resistance, because once it does, I think the party will be on in the stock market. And taking a look at gold and silver, both of them are retreating a little bit from the highs that they hit yesterday. They both look like they're still in bullish context. And if gold can hold, I'm not a rapper, and not see any more weakness. And taking a look at oil, this one has just been trudging along. Similar to that Bitcoin chart, it touches that 20 EMA or the 50 EMA and then finds buying pressure right away. And until it tells us otherwise, follow the trend, it's going to continue going up. But interestingly enough, the 10-year has actually been going down, and this is a really bearish candle, opening and closing below this 20 EMA. What a truly interesting time to be in the market or really be alive, as Drake says. And with all this volatility, it's a trader's paradise and an investor's potential opportunity to buy the dip. Let me know in the comments, what do you think of these markets right now? Are you eyeing crypto, stocks, forex? What's happening? What are you looking at? As always, hit that like button, that subscribe button, and I will see you guys in the next video.